All right, so let's begin the show with our special segment, Meet Your Fund Manager, wherein we talk to a fund manager and know all about the strategies related to that particular fund. But today, the fund in focus is Axis Multicap Fund, and we will talk about this category and the market movement ahead with Shreyash Devalkar, Head Equities, Axis Mutual Fund. Shreyash, good evening and welcome to the Money Show. So clearly, I want to begin with discussing about the current market movement, where so far what we've seen since last week is that market is moving in a very range-bound territory. What, according to you, could be the triggers behind the trajectory going ahead, and also will this pace continue of the market?
So, if you look at a market from long-term perspective, when the rally started, especially post COVID, actually it went one way till somewhere around October of 21, and after that it consolidated a lot. And then after from the peaks of October 21 to Jan 22, we are somewhere around 8 to 10% up. So why I'm just bringing in this perspective is when we use rally, the words like that, point is that the market has consolidated. It is a lot in last 1.5 year. And then last few months, what the rally we have seen, it has yielded additional 8 to 10% return at the indices levels in from the peak of October 21 to Jan 22. So that if you look at that behavior or that pattern, I think that that considering the earning growth, considering overall valuation, one should expect that the markets will consolidate and give you moves based on the earning growth trajectory, which is generally closer to the nominal GDP growth.
Right, Shreyash, going ahead, we also had the policy announcement this week. What are your expectations on that?
Actually, RBI has been highlighting the risk of inflation has not gone behind yet, and that's where if you even if now if you look at that, some of the food item related inflation is up. So in that sense, one can remain hawkish. But having said that, some of this item and the inflation here is transitory, and that's where one need not take a step of hiking. So in that context, I think that it would be neutralish stance.
All right, let's talk about the multi-cap space, and then we'll also talk about your exposure in the fund and your strategy for the fund. So multi-cap space actually has been a very exciting space for investors, especially the run-up that we've seen in the mid-cap and small-cap has really caught on to investors. But the question over here to you is, talking about mid-cap and small-cap space, Shreyash, do you think there is steam still left in this particular category? Are the valuations, according to you, overstretched?
Actually, when I look at large, mid, and small cap spaces, probably one need to look at them in terms of the content what you own in them, rather than just trying to say that these large companies versus mid and small, and then high beta, low beta, or high risk and low risk. So that is one way to look at it. But the other way to look at it is if you see in economy. The consumption part of economy has more representation in large cap companies and large cap indices and large cap funds. The B2B part of economy, that is investment and exports, and especially manufacturing exports, these two part has more representation in mid and small cap categories. So if you look at chemical, auto ancillary exports, or manufacturing goods exports, so these are having more representation in mid and small cap categories. So if you notice, all these three categories, large, mid, and small, actually they are complementary to each other. They are not either or. So the large cap is more about consumption, mid and small cap is more about manufacturing stories of India and so on, and investment story of India. So in that context, these all being complementary, and it gets reflected more in the multi-cap as a category, because here you have to have 25, 25, 25 in large, mid, small. So in that sense, this category actually represents the the exposure to individually all elements of India growth story, and not just tilted towards consumption in case of large cap category, or tilted towards mid and small cap category, which are more in investment and exports. So in that context, yes, one should look at it in a holistic manner, and it gives you exposure to overall economy of India. That's where this fund category definitely stands out. When it comes to valuation, yes, the valuation definitely in the B2B categories are way higher than their pre-COVID levels. And that's where, again, its representation more being mid and small, that's what is getting reflected. While in case of large caps, which has more representation in consumption-oriented sectors, their valuations are not way higher than their pre-COVID levels. And in that context, the re-rating of the consumption-oriented sector has not happened, because probably some of them were already pricey even earlier, while the re-rating has happened on the other hand in the mid and small. So there is definitely no risk reward based on valuation in choosing one category versus other. And that's where what I commented is that one should look at it more as a representation of economy rather than risk reward of or a trade-off of one versus other.
So, Shreyash, talking about the sectors that you have in the portfolio, what's the kind of allocation across market caps in sectors?
Yeah, so broadly, we should be somewhere around one third in mid and one third in large and small cap category, and somewhere around 25% in 26% in mid cap categories as of last month.
Right, right. And sector-wise allocation in the fund?
Sector-wise, the exposure, as I said, one should look at it more from the B2B versus B2C and so on. So in that context, obviously, financial services sector is absolutely high, though not compared to the relative. So absolutely, it is somewhere around 25% plus. While the sectors which are in the B2B part of economy or manufacturing part of economy, which are more in, say, auto ancillaries, they are there. Some of them are from the healthcare. Actually, in healthcare, we have a good exposure to hospitals as well. We have good exposure to consumer durable, real estate companies, and consumer services. So it's broadly diversified. It's broadly diversified across sub-segment of economy.
Shreyash, do you also see large cap coming back in the focus in coming months, or the kind of reading you have for this particular market cap? Because right now what's driving is definitely mid cap and small cap space, but then you think this will large cap will just take a lead on?
So large cap, in my opinion, will definitely outperform in a scenario when consumption-oriented stocks do well. So if you look at large cap composition of, say, Nifty or any other benchmark large cap indices, then you will notice that the representation of financial services is very high. Then combined representation of financial services, auto OEMs, and FMCG companies would be closer to 60% as such. So this bigger pack, and whose growth is more dependent on the consumption story of India. So that part, if it starts delivering consistently across the board and more widespread rather than only in the upper part of K. So if that growth comes widespread, then there is a high probability that the large cap as a segment will do well. And as I highlighted earlier, valuation wise, the valuation of large cap oriented sectors are closer to their pre-COVID levels compared to the B2B segments, which are more in mid and small. And that's where that provides you additional tailwind.
Shreyash, talking about mid cap and small cap, now this particular category has a wider universe, compared to a large cap. So, how do you try to mitigate the risk that's involved in this particular market cap category to reduce the volatility and also to keep up with the momentum of return that the investors are witnessing now?
Sure. So that here the fallback is always your process and philosophy. So there we have quality and growth as a philosophy. So if you try to adhere to good quality companies, so when you buy any mid or small, and for that matter large as well, what you carry is a business risk. You carry a business cycle risk. You carry management risk, and you carry valuation risk. So generally, what is observed as lesser is the risk on the management side, the lesser is the risk on business quality side. Business cycle risk is what we can't predict. So obviously, one can predict it. There are some are which are more cyclical, some are less cyclical, but business cycle risk is what we can take as such, and we can be through it through the cycle. But when it comes to businesses, that whether the really business is good, whether it has a moat, whether it is a competitive advantage, if you really assess those right, and if the business withstand through the test of ups and downs, so that is actually the bedrock of your downside, because business cycle will come. Sometimes you may be able to predict, sometimes you may not be able to predict, and in that scenario, this having a companies which are basically good businesses with good management would always help, and that actually helps you in reducing the risk in the portfolio.
All right. So now, looking at the way you are strategizing the fund, and the kind of view you have across market caps, large, mid, and small. So, Shreyash, do you think it's time to increase your allocation in multi-cap to reap all the benefits that you've predicted for the coming quarters?
So when it comes to allocation part, as always, it is said that it is individual's decision based on its risk appetite and how much one should have exposure to large, mid, small, based on time horizons, etc. In my judgment, this 25, 25, 25 and plus kind of model of multi-cap is generally broadly all encompassing, and it because it gives you representation across the board. In that sense, if someone don't want to really diversify into too many funds in its portfolio, then multi-cap definitely stands out as a good option, wherein one don't take call on large versus mid versus small, because again such calls are easier said than done, and that's where when you are in certain percentage in large, mid, small, always that is always helpful, rather than taking a call and now I want to go more in large or more in mid. Those things are seldom successful. So in that context, multi-cap as a category definitely is would be considered if you don't want to diversify in too many funds as such.
All right, Shreyash, last question to you, and then we'll wrap up this discussion. Your view on the current earnings season and also the expectation for the next quarters.
So earnings season obviously has already passed in most of the segments, especially in the large cap. And so far, what we have observed that if I want to comment more from the sector's point of view, then on the exports part of the businesses, what we have observed is earlier IT shown sign of slowdown. Then the chemical companies shown the sign of slowdown. Now in this earnings season, one observation is some of the manufacturing exports are also showing some sign of slowdown because of the exports especially. So that's how the export part of stories have panned out. When it comes to consumption part of stories are concerned, they are yet to give you a positivity which market wants at the current valuation. So that's where it is. Otherwise, the result season has been good for those sector as well. Definitely, many of the companies have shown you margin expansion because of the lower commodity costs in respective sectors. So that has been the great performance driver and earning growth driver for most of the companies. It's both in consumption oriented as well as industrials companies. And when it comes to investment part of economy, I think there even now most of the companies are showing good results the way they were showing for last few quarters.
All right, Shreyash, I think that will be all. Thank you so much for being on the show and explaining us all the details on the Axis Multicap Fund and also the market movement going ahead. On that note, we slip into a short break on the Money Show, but then post that, let's talk about AI deepfake scam, which is actually targeting grandparents. So what are these kind of scams that we are going to highlight, and how do you protect your grandparents from this cybersecurity scam and fraud after this break?